At 10, the Federal Reserve's latest interest rate hike is changing the housing market. We saw record sales in 2020 as families jumped at the chance to buy a home. Well, now the Fed is moving the market in the opposite direction by making the entire process more expensive.
So what does this mean for buyers and sellers? Team 12's William Pitts explains.
We were pampered when it comes to selling homes. List your house, get an offer, maybe before the sign's even in the ground. But those days are over.
Yes, the housing market is cooling off, but no, it is nothing like 2008. That was a disaster. This, experts say, is just a correction.
This is not a market crash. Prices are staying about the same. They're adjusting a little bit, mostly on listings that were overpriced.
Here's what cooling off means. A couple of months ago, the average home was for sale for about 4 days in Phoenix. Now it's 10 to 20. That's still not bad. And during the height of the pandemic, when the Phoenix market was on fire, there were only 4,000 homes listed per day. Now it's 16,000. Normal times would be 35,000.
Even though supply is still considered low, demand is also coming in low. We can't expect interest rates to go up from 3.1% in December all the way up to as high as 5.8 or 6 in some cases and not see some kind of result in the demand.
What has gone way down, experts say, is iBuyers, the companies that pay you for your house, then turn around and sell it again.
Bear in mind, Open Door and OfferPad and a lot of these corporate iBuyers were flipping their homes to institutions based out of Wall Street, So when Wall Street started to pull out, they scaled back quite a bit.
There are some of the iBuyers that purchased the properties and then now have them listed actually for less than what they paid for them.
All of that means the market is slowing and prices are dropping, even if you're not selling.
And yes, your house values will probably go down, but experts say don't worry about that. That's the way it's supposed to be. In fact, that's the whole point of raising interest rates. They want the market to slow down.
Because economically, slower spending helps fight inflation. At least that's the hope. The post-pandemic economy is uncharted territory. In any case, the new revised housing market is here. And the experts think we should get used to it.
I think it's going to be like this for a while, like maybe the next 6 to 8 months. I think we're going to see this.
William Pitts, 12 News.
All right, William, thank you.